I did own the landscape company for 15 years, and I did hate my numbers, and I didn't understand my money, and I never had cash in the bank. Always struggled with that. I just got really frustrated with not knowing any of those things, not understanding any of that. And I solved all my cash flow problems by selling 3 more jobs.
Welcome to Success Unleashed, Beyond the Job Site, the only podcast created to help contractors win in business and in life. Now your host, Gerritt Bake.
All right, welcome back to another episode of the Success Unleashed podcast. We have another special guest for you. He's actually not a contractor. I say that with a little asterisk because he used to be a contractor. Now, we're not talking to used-to-be's here on the show, but we are going to talk to somebody who has a ton of experience in a space that you are very familiar with, plus some areas that you struggle with. Now, before I introduce my next guest, I will tell you this. He had, or should say was the owner of a landscaping business for 15 years. So checks the box of the contracting space. I think he got bored with being a business owner, went back to school, got his master's degree in accounting, of all things, and became, for lack of a better term, I'm starting to call him now the Cashflow King. If he doesn't have a nickname, he does now. But really interesting story, and we'll dive into some of his background. But I will tell you that he was a college wrestler, obviously owned a landscaping company, very successful there. And then now he helps contractors with all things cash flow. Without further ado, I want to introduce my guest, my friend, Jeremy Dean Lott.
How you doing?
I'm doing great, man. I'm doing great.
Got to throw the Dean in there, right?
Yeah, I do.
Isn't that what they say about all the people that have made assassination attempts on the presidents? They all use their middle name.
I did not know that.
There you go.
But wait, is this thing on? Are we recording? What's happening here? So Jeremy, we've known each other for a while now. But I want to really dive into your story because it is so unique, right? Most contractors hate accounting. They hate their books. They hate QuickBooks. They hate P&Ls. They don't understand what their numbers mean. They don't understand what gross revenue versus, net profit is. They don't understand any of these things, right?
Yeah.
And here you are, after having owned a contracting business for 15 years, you go back to school, you become an accountant. Yeah. Why?
Well, I don't know how much you want me to get into on that.
As much as you want, man.
Yeah. Okay. So I did own the landscape company for 15 years, and I did hate my numbers, and I didn't understand my money, and I never had cash in the bank. Always struggled with that. And I just got really frustrated with not knowing any of those things, not understanding any of that. And I solved all my cash flow problems by selling 3 more jobs. Because if you get 3 more jobs, you have 3 more deposits, and that floats your cash for a little bit longer, right? Well, in 2008, all the people doing landscape design and big installs, which is mainly what I did, disappeared. There weren't any more. So I couldn't sell 3 more jobs anymore, and I got in trouble with my cash, and I ended up declaring bankruptcy. And that was it's the ultimate in business failure, right? Nobody wants to go down that path. It's horrible. It's a black mark on your life for the rest of your life. And I was pretty in the dumps, right? And I went into my accountant a few months later to get my taxes filed. And we were chatting there across the desk about the different topics for my taxes. And we got on the topic of my bankruptcy, and he stopped what he was doing, and he turned to me and looked at me across the desk, and he said, "Yeah, I've seen that coming for several years now."
Wow.
So obviously I was shocked. I felt a little betrayed, and I was angry, really angry, because he hadn't helped me, and nobody else had ever taught me anything about money or my numbers. And so I stewed on that for a little bit, trying to figure out what my next step would be in life. And I came to the conclusion that there were most likely a lot of other people out there that were just like me, other contractors that didn't understand their money, that weren't making good profits, that didn't have cash flow. And I wanted to help them be able to avoid those problems. So I made that decision to become an accountant. And so that was a long trail for me. As you've already mentioned, went back to school, actually got my MBA and took all the upper level accounting courses. I worked 4 years doing audit. I read a ton of books about business and finances. And as I was going through this whole process, I'm seeing people talk about all these problems that I'd had and seeing what their solutions were. And so I kind of packaged them all together. And now I do the bookkeeping and I help contractors through a bunch of different modules that I have to be able to increase their profit and to be able to improve cash flow.
Well, first of all, thank you for sharing that. And if you're watching or listening, pay attention, right? You'll hear me say this a lot. And the more willing you are to be honest with your situation, the more likely you are to find a solution.
Yeah.
Right. And your numbers will get you in trouble or they'll propel you forward, but they can't do both.
Right.
Now, I want to kind of dive into this a little bit. You know, you have a very unique perspective on things.
Yeah.
Having been a contractor for 15 years and then now almost 15 years, you know, being an accountant for contractors.
Right.
Now, what would you say is the reason that most contractors get in trouble when it comes to the financial side of things?
Yeah. So I usually pin it down to two different things. The first one is the pricing people have. They don't know their real costs. They don't understand the overhead in their business and how to allocate that. And therefore their pricing, they don't know if they're making a profit on each job, especially if they're bidding per unit, you know, per square foot, per device, per yard for concrete, any of those type things. There's no way you can know how profitable you are if you're bidding that way. The second big reason is no strategy for paying their bills. It comes down to the contractor industry is a group of very honest, very hardworking people. And they want to make sure everybody gets paid. And of course, I'm saying, you know, you definitely need to pay everyone. I'm not saying that. What I'm saying is that you've got to have a strategy for how to approach that.
And that's huge, right? Because when contractors start off and you know, obviously, you know this, they're really good at their craft, whatever their craft is. They're good at concrete. They're good at landscaping. They're good at painting. They're good at remodeling.
Yeah.
But they don't understand that being a tradesman or a craftsman does not equate to being a business owner.
Right.
Right. And the understanding that you need to have as a business owner. Right. And you brought up, you know, those two areas. I want to dive into that a little bit deeper. When we talk about profit, we can break it up into a couple different categories. But I want you to kind of talk about what would be a very easy way for a contractor to understand and determine a true net profit. Like, this is the money that's left over, that's for me, that's in my bank account. It's not going to go out anywhere else.
Yeah. So as you've seen, I love doing the demonstration with M&Ms, right? You tear open a package of M&Ms, you dump them out on the desk, and then you sort them by color, right? And then what you need to do is group them into different groups, and those groups represent different things on your profit and loss. Well, the problem is that a standard profit and loss is set up for the government, right? It's so that you can report to the IRS. It's so that you can report to banks or use it to get loans with banks. Some people have to get audited because they have bonds and things like that. And so all of these reasons are why the profit and loss is set up the way that it is. But it's not as useful as it could be for us in that format. And so that's why we look at the M&Ms, right? We have the green is all of your sales, all of your income. And then we have the blue, which is all of your direct labor, the labor that goes on the job site. And then we have the red, which is your materials and subcontractors and equipment rental and those type of things. And then we have those yellow ones. And the yellow ones are your overhead. So when I'm talking about overhead is often misunderstood because most people tend to think that overhead means my office, right? All of the business expenses for my office. Well, actually, what we want to look at instead is what goes on the truck to the job site, right? And the answer is the red, yellow, and blue M&Ms. Those go on the truck to the job site, right? So when you think about it, you're putting your labor on the truck, and that goes to the job site, right? All the people, all your workers. You put all of your materials on the truck, and that goes to the job site. And those things are pretty obvious, right? The interesting thing, the thing that's harder to understand is all those other intangibles that go to the job site. Like, for instance, your liability insurance, your cell phone, your fuel for your equipment and your vehicles, right? All of these other things are costs that are going on that truck to the job site, right? But we don't account for them as costs of doing business. Well, the thing is, if you double the amount of sales that you have, all those red, yellow, and blue M&Ms are most likely going to double along with the green M&Ms, right? So if you have twice as much in sales, you'll most likely have twice as much in labor. You'll most likely have twice as much in materials. And all of the yellow M&Ms will double as well. You'll have more liability insurance. You'll have more cell phones. You'll have more payroll expenses. You'll have more fuel for your equipment and vehicles, right? All those things will double as well. And so we like to connect those things together, the revenue, the green M&Ms, and then the red, yellow, and blue M&Ms. And we want to look at those red, yellow, and blue M&Ms as our costs when we're figuring out our pricing. So rather than doing per square unit pricing, we're going to bid a process and look at each step in our process for doing our install. And for each step in our process, we're going to calculate the labor, we're going to calculate the materials, and then we're going to allocate some overhead to labor and materials for each step in the process. And then what we end up with in the end is a total that represents our true costs for doing that job. And in doing that, we know now what it costs us to do that job. We know what the basement price can be in order to cover the costs for that job. Then after that, you add a markup on top of that, and you know exactly what your potential profit is if you keep to the budget for the job. And so when you do things that way, you know you're profitable ahead of time, and you know how much profit you can potentially make on a job.
I like that. Now, to kind of recap what you just said.
Yeah.
Number one, it's important to know what all of your costs are,
Yes.
right? Number two, it's important to apply all of those costs to every job,
Right.
right? And then number three, once you have that cost, now you can determine, okay, what do I want my actual margins to be? And then you tack that on to the top.
Exactly.
Okay. Fair enough. Like, again, you're not an accountant. It's okay. You don't have to be. You will hear me say multiple times, you should probably have a conversation with Jeremy. I think I've referred him to like 20 people so far.
Yeah, seriously.
And I do it because, again, I've tried to refer accountants out to contractors before, and they suck at explaining how to do things, or they suck at explaining or understanding how things really work, right? Being a contractor is different from being another type of business owner.
Yeah.
And so it's an understanding of how do the numbers work? And then if they're not working for you, what do we need to do to make those adjustments so that they do, right? Now, you brought up something that I want to discuss that a lot of contractors don't really understand. What is the difference between markup and margin?
So a markup is, say you have one big block, right? And that represents your costs, that big block. Well, you're going to take that block and you're going to divide it into two sections, right? And then we're going to copy one of those blocks and add it onto the top, right? So now we have 3 blocks. That represents a 50% markup because we had one block. We took 50% of that block. We added it on top of the other 2 blocks so that we now have 3 blocks, right? So when you mark it up, it's 50% of that total. When you look at the margin on the back end, we now have 3 blocks, and one of those 3 blocks is the margin. That's your profit. So looking at it from the other direction, at the end of the job, and after you've put together the whole price, your margin is actually 1 of 3 or 33%. And so that's where people tend to get mixed up. A lot of time I'll have people that will do a 50% markup on a job, and then they'll end up with only a 33% margin, and they'll think that they've lost money or that they're inefficient somewhere. And so, yeah, it's very important to understand the difference between those two.
Pay attention to what he just said, okay? Super simple way of looking at it. You have your cost. This is how much it's going to cost to do the job. And then you have to figure out, okay, what's my markup going to be on that job? And perfect example, right? You're going to take half of your costs and you're going to double that up. So your markup could be 50%. That's not how much you're going to make though, right? What you're going to make, or keep, we should say, is 33%. Okay. Understand that, because when you say, hey, I want my margins to be 20% or 30% or 50%, you have to understand how to get to those margins. Your markup gets you to your margins. Your markup is not your margin.
Right.
Very key. Very key. Well, let me ask you, I want to kind of switch gears a little bit. I know we'll come back to it.
Okay.
Wrestling.
Yeah.
You got to wrestle in college, which not a lot of people do,
right.
do sports in college, period. Right. So you got to wrestle in college. What was that experience like?
Oh my gosh. So I had the unique opportunity to have a coach that is probably one of the top 5 wrestlers in the world in all time. It was Mark Schultz, and he was absolutely amazing. Just being in his presence and the things that you can learn from him when he's teaching were fantastic. So that part of the experience was outstanding. Love that. And I'm still friends with him, and we're actually looking at putting together a reunion for all of his wrestlers.
Oh, wow.
Back in the day this summer. So that should be fun.
That's cool.
But the other great part about it is that the competition level, everyone that you wrestle in college was a state champ. Everyone, right? And so the competition level is so much higher, and it forces you to work and become so much more. So that was awesome. And then of course there's the traveling and the hanging out with the guys and, you know, sweating it out with the guys and all those kind of things that builds that camaraderie that was super, super awesome as well.
All right. How many times in a season would you puke during a workout?
Honestly?
Yeah.
Never puked.
What?
Yeah.
Never puked.
I never puked. Yeah.
Oh. By the way, I'm asking him because if you've never wrestled, like wrestling is one of the hardest things physically you will ever do, right? Because it's so intense for such a long period of time. And there are a lot of people that puke. I used to wrestle until I shattered my elbow, and then there was no more wrestling for me.
Yeah.
But yeah, I puked a few times. Right?
Yeah. Yeah.
So I want to bridge the gap here.
Okay.
Biggest lesson that you learned being a wrestler at the collegiate level that has helped you be successful as a business owner?
Ooh, that's a really good question. I like that. The answer for me has got to be the basics. In college, you kind of expect everybody to be more fancy and have more elaborate moves and anyway, you expect it to be more fancy. But in reality, the people that are succeeding in college are the ones that have the basics down, the absolute basics. And I've found the same thing in business. It comes down to the absolute basics in business. Do you have good marketing? Can you sell? Are you on top of your finances? Are you on top of your production and have systems and procedures for your production and for all those other things? And so that's what's helped me the most in business when it comes to wrestling.
I love that. Mastering the fundamentals, right? It's when things get tough, we think, oh, I need to try something new, or I need to do something different, or make it more complicated or fancy.
Right.
And the truth is, no, you just need to go back down to the fundamentals, right?
Yeah.
I love that you said that. And obviously we're talking books with you, but it really applies business wide. And you mentioned that, right? Marketing is nothing more than getting people's attention.
Right.
And so fundamentally, how are you getting people's attention? Right?
Yeah.
Sales is a process. Once you understand psychology, once you understand how to overcome objections, it is literally a process. What is your process? Same thing with running your jobs, right? In everything inside of your business, by the way, and this is what successful business owners do, is they have a system and they have a process inside of every aspect of their business, right? Because as you know, men lie, women lie, numbers don't lie.
Right.
Right. And your numbers will always tell you exactly where you're at. You know, I was having a conversation with a trim carpenter the other day, and he said, it feels like every year about this time, I'm handing over every single dollar in my bank account to Uncle Sam. And how many contractors can relate, right?
Right. Yeah.
And then the follow-up question to that is, well, why?
Yeah.
Do you understand the reason why? And it's because of what we were just talking about.
Right.
Right. So I want to kind of dive into that a little bit for you is, why is it so important to know your numbers?
So I do a lot of work helping people to be able to improve profit and to be able to increase their cash flow. And I can't do anything without solid financials. I've got to have a balance sheet. I've got to have a profit and loss. If I don't have those things, then I can't, going back to the M&Ms analogy, I can't take the bag and dump it out and sort them into different colors and then group them together. And if I can't do that and can't understand what costs are for your business, I can't teach you how to bid better. And if I don't know what the hill is that I have to get over that represents your selling, general, and admin expenses, then I don't know when I'm going to be profitable or what my break even is. I don't know how to engineer the profit that I want for the year. And so that holds you back with all of those things.
So true. Let me ask you, back to wrestling here, right? How much time would you guys spend prepping for and studying an opponent prior to the match?
So back in my day, video wasn't quite as common. And so we did it more, I did it more in high school football, a lot in high school football, but in college, video wasn't as readily available. And so we didn't spend as much time studying the opponent. I know that's not what you want to hear, but I will say this, all throughout high school, my parents videoed all of my matches, and I would review every single one of them and see where I did good, where I did wrong. And it helped me to be able to understand myself and what I was doing well and what needed improvement in my style.
Yeah. I don't want to date us.
Right.
But yes, you're right. There wasn't a ton of video
Right.
back then. It's so funny. My son is a senior. He does pole vault, and we record every single one of his jumps. And it's literally like right away. He walks over to us. We pull open the phone. We watch it in slow-mo. We freeze frame, and he can make adjustments on the fly.
Right.
But I think the important thing is, and you brought this up already, the important thing is when you have the information in front of you, you can make decisions based on that information.
Right.
Right. Versus like, hey, I think you did all right. Yeah, but I lost. Yeah, but you did all right. Okay, but what does that mean? Yeah. Like, what do I need to do better? What am I already good at? Where's the gap in the hole? And again, going back to this idea of understanding your numbers, it's impossible for you to make decisions if you don't know your numbers.
Yeah.
Right.
Yep.
I don't care if you make $1 million a year if you keep $23.32.
Yep.
That's not what this game is about. In fact, one more thing. There's 2 contractors I'm working with now that are actually, their focus this year is not to sell more. It's to increase their margins.
Yeah, exactly. Exactly. Ultimately, the revenue number is the bragging, right? That's your pride. I have a $10 million company, right? But you really don't care what your sales are if you don't have any money in the bank.
Yeah.
Yeah.
Very true. Very true. Let me ask you, how important is it for a contractor to understand their cash flow cycle?
So a lot of businesses, not even just contractors, don't understand what's going on with their business. And usually it goes something like this. I get paid for the Johnson job. I sit down at my desk and I pull up my banking app on my phone and I see how much money I have in there, right? Then I take my stack of bills and I start going through them and I start saying, okay, I'm going to pay that one. I'm going to pay that one. I'm going to pay that one. And you do that until the funds are all gone in your bank, right? And then you can move on, right? You pay all those and you move on. But there's no cash left in your bank. So when next week you have a big payment to make for a supplier or something to keep the job moving, there's no money available because you spent it all, right? And so it's important to understand what's coming up and what income is coming in the future, and so that you can plan accordingly and be able to know when you can pay your bills, what you can pay, and when money will be coming in to be able to cover more bills.
Yeah. And I see a lot of contractors, especially those that work, either in larger residential projects or commercial projects, right?
Yeah.
Because they don't understand the pay cycles, right? In dealing with homeowners, it's usually, I do the work, I get paid. And if they're smaller jobs, you're usually getting a check right away. If it's remodel, there's usually some kind of pay schedule, 50% up front, 25 at rough in, 25 when at final, right? Those are a lot easier to manage. But when you're getting into the commercial space, now you've got terms that are net 30, net 60, net 90 that you're having to worry about covering now all of your expenses that don't stop when you're not working or not doing jobs. They continue, right? So now you've got to cover all those things. What would you say would be some good strategies for contractors that find themselves in these situations?
I'm going to say honesty. And when I say that, most people immediately think, oh, I'm honest. I pay all my vendors. But are you being honest with yourself and your business? Because it's wonderful when you have a sub that finishes his portion and comes to you as soon as he's finished and says, here, I need money, right? But you're not being honest with yourself and with your business if you pay him before you've been paid. And it feels good because, that's a weight off my shoulder. I've taken care of him. But it is not being honest with your business and your cash flow, right? And so it's really important, like we were talking about earlier with cash flow, to understand when money's coming in from what job and who you can pay at that point in time. And then be able to tell them, hey, the job will be to this point. We'll get a draw at this point. That's when we'll pay you. As opposed to listening to the story about, I've got all these bills to pay and I've got my kids that need food and I really need the money right now. Okay, fine. Here you go. I'll sacrifice all the money in my account right now to cover all of my bills so that I can take care of you instead. Right.
Yeah.
So that's kind of
I like that. And one of the things that you can do as a contractor, by the way, to help mitigate these situations is a contract, right? And inside of your contract, one of the important things that you need to cover are your payment terms, which you were mentioning here. If you're doing these smaller jobs and you're getting paid quickly, sure, you can pay your guys pretty quickly, right? But if you're starting to get into some of these, delays in payment schedules, a very easy way to overcome that is inside of your contract, you have a paid when paid clause, which means, yes, I'm going to pay you, but I'm going to pay you when I get paid. And you're upfront about this, like you're mentioning, right? Like, hey, listen, this is how we work. And if the contractor or the sub that doesn't want to work for those terms, then, they don't work for you, right?
Yeah.
But you're not sacrificing yourself and your business to satisfy somebody else.
Yeah. And the other huge part of that is maintaining your mechanics lien rights.
Yep.
Those are huge. They're very important. And basically what mechanics lien rights are, for those listening that aren't as familiar with that term, is you have the right to lien a property that you're working on if you don't get paid. Collecting on it is kind of a different story, but it scares a lot of people, and it is very important for a lot of generals that when you have that lien on there to get you paid as soon as possible, because a potential lien will hold up their draws and them being able to get money down the line. And so it's very important to maintain your lien rights for yourself, but also for your subs and for the people providing the materials for your job.
Right.
Because that protects everyone.
Right. Very true. And by the way, every single state has a different approach when it comes to lien rights. So do your research and figure out, hey, do I have to file a pre-lien? When I do file a lien, how many days do I have to file a lien, right?
Yeah.
Understand the entire process. And, if you can understand it, then you can use it as a tool to make sure that you're getting paid. Right. Otherwise, and I can't tell you how many contractors have been like, yeah, I lost 60,000 on this job, lost 120 on that job. And I'm like, why? Didn't have a contract, didn't file a lien.
Yep.
So again, those things are set up to protect you. So use them that way. I want to ask you about a book. There's a book called Profit First for contractors.
Yeah.
I'll be honest, I tried to read it and it was
kind of
it was
dry.
a whole lot of accounting terms,
Right.
and theories and practices.
Uh-huh.
And as you mentioned, it was really dry. Simplify that down.
Okay.
Actually, let me ask you. I think I already know the answer, but let me ask you. Good book for contractors?
Fantastic. I actually am more a fan of Profit First, that book, than Profit First for Contractors. Profit First for Contractors gets into some more of the nitty gritty and, like you said, the numbers. But Profit First is a much easier read.
Okay.
Mike Michalowicz, who is the author of Profit First, has a much more engaging voice, and he's funny, and it's a much easier read, I think.
Well, I wish I would have known that
Yeah.
ahead of time.
Right.
Okay, so we established Profit First, the book, versus Profit First for Contractors. And
Right.
again, if you geek out on like the nitty gritty and the details, go ahead, read it, knock yourself out. So we established good book. Simplify that down. Like,
Yeah.
what does it teach, and why is it so important?
Right. So in high school, I had really good grades. I had 3.9 GPA that I graduated with. And I got all of my homework done always. I never had late or missing assignments.
I hate you.
But that was honestly the key to getting my good GPA, right? The problem was, if I had a week and a half to do a big, say, book report, I wouldn't do it until the night before, right? And then I'd stay up all night long and do the whole thing because I had a week and a half to do it, right? And so there is a law out there that is kind of a human behavior law, and the definition is kind of screwy, but basically what it means is that if you're given this much, you're going to use this much.
Yep.
Right? If you're only given this much, you'll only use this much and you'll get by on it. You'll be fine. Right? So if they had made the assignment 2 days out, I still would have got it done in 2 days. Well, on the last day, right? But
Within the timeline.
exactly. And so the same thing applies to our money. We talked a little bit earlier about how you sit down, you open up your banking app, you see how much money is in there, you spend until it's gone, right? So the concept of Profit First is to take that equation, the income minus expenses equals profit. And in that equation, we're taking all of our expenses out first, and then whatever's left over is profit. Well, we know from this natural behavior, there's not going to be anything left. You're going to spend it all, right? And so the concept of Profit First is to change that equation, income minus expenses equals profit, to income minus profit equals expenses. So you take that profit chunk out first and you set it aside, and then you'll have this much money to spend on your expenses, and you'll use up that whole amount. But when you use up that whole amount, there's still some sitting aside for you. So that is Profit First summed up.
Beautiful. If you had an aha moment, light bulb went off, highly recommend going to get the book. Like,
yeah, great book.
It'll change your approach to money, and that was a great explanation. All right. This is a question that I love to ask everybody kind of towards the end of the show, and I never warn them.
Okay.
It's not that crazy. Okay. You're starting at zero again.
Uh-huh.
Your business.
Yeah.
So this is just business. You're starting at zero again.
Okay.
You have $1,000. What are you doing with that $1,000?
Marketing.
Explain.
So first I would hit all of the free resources, right? I'd do as much networking as I could. I would be present on Facebook and Instagram and LinkedIn as much as I possibly could by writing good informational articles and by posting some entertaining and engaging content as well, right? To build up my following that way. And then after that point, I would start looking at, for my business in particular, where I'm dealing with contractors, I would probably start looking at buying a list for Constant Contact to start sending out emails to other contractors. And I would possibly look at focusing on one region and sending out postcards and doing a mailing campaign of some sort to be able to start drum up more business.
There it is. That's it. It's interesting. We're a few episodes into this and asking that same question. There's a lot of similar answers. And again, I only bring in successful contractors to the show because
and bookkeepers
/
accountants.
But the responses are the same in the same general area, right? Because as you mentioned earlier, right, it's all about the fundamentals. So if you've taken away anything from this podcast today, understand that mastering the fundamentals is the key to success, right? Not only that, when you get in trouble, it's going back to those fundamentals, right? The fundamentals win the games. Michael Phelps.
Yeah.
Everybody remembers Michael Phelps. If you don't Google him, you youngsters. But Michael Phelps, I think, won 9 gold medals in one Olympics, right? Which was a record. And I was listening to a podcast the other day where he was talking. And inside of this podcast, they asked him, hey, what do you think led to your success?
Right.
And he said, for 5 years, I didn't miss a day in the pool. And all I did for those 5 years was the fundamentals.
Right.
5 years, never missing a day. So everybody looks like, wow, you won 9 Olympic gold medals. It must be so great and so awesome and whatever. He's like, yeah, but you didn't see the 5 years. Right. And obviously there was more than just 5 years, but for 5 years, he didn't miss a workout, right? All about the fundamentals. If you're not experiencing success right now, don't get frustrated, right? Don't give up. Go back to the fundamentals. Everything is about the fundamentals. Yeah. All right. That's all we got for you. Jeremy, I appreciate you being a guest.
You bet. It's been great.
We'll have his contact information so you guys can reach out to him if you have any questions on all things accounting. By the way, the name of your business is?
Foundation Accounting and Consulting.
Foundation Accounting and Consulting. We'll have his contact information for you. But you guys know what time it is. Let's talk more action. It's time to get after it. 3, 2, 1. Off you go. Thanks for listening to the Success Unleashed podcast. Before we go, show some love for your favorite podcast by liking, subscribing, and leaving us a review. Until we see you again, it's time to get after it. 3, 2, 1, off you go.